Selling naked puts. Today I just want to show you quickly. A lot of people right now are short, or we're short the market, meaning we're probably long a bunch of puts, we're short a bunch of different stocks, whatever it is, whatever the case may be. We're anticipating a retest of the lows in the S&P, so if the S&P is going to drop back down to here again, perhaps it's going to fall even further. That's our thesis for the market at the moment. We had the A down, a B up, and now we're working on a C down possibly. Some of us have bought puts in a bunch of different bunch of stock. Excuse me, a bunch of different stocks. So we're essentially short the market. Okay, so what else can we do though right now? One way to hedge that, because volatility is so high right now, what you really want to be doing is selling options. But selling options does tend to limit it limits your profit potential often, and it also opens you up to a lot of risk. But if we're already short the market, let's say we bought puts in a bunch of different travel sector stocks, and if the market does start collapsing, great, we're going to make a bunch of money on those puts. But maybe you want to hedge that a little bit too. One thing you can do right now in this kind of environment is you can sell puts. You can sell them naked. So let's say we're long puts on a bunch of stocks that we don't really like much, companies we don't expect to do very well, maybe companies we even expect to go bankrupt in this environment. Okay, so if the market goes down, those stocks are going to lose money, and we're going to make a bunch of money. However, there's going to be stocks that are going to go down as well, but stocks that we like and maybe we want to buy at some point. One of those for me is Square. Okay, so maybe I'm looking at this and I'm thinking, okay, if the general market falls, I'm going to make a bunch of money on those long puts, but what else could I look to do? I could look to buy Square down here. So instead of waiting for that to happen and then buying the stock here, one thing I can do is I can sell naked puts down here at say 30, and if the stock goes down that low, then I'll be assigned those shares, and I'll have to buy the stock itself at that level. Okay, it's kind of confusing, I know, but let me show you what I'm talking about on the option chain. Okay, so right now Square stock is at 42.79. I'm going to look out at May here. That's 42 days away. And we're looking at the 30 puts. Okay. Now, if I sold these, they're trading for $1.50 right now. So if I sold these for $1.50, basically what happens is at $30, below $30, I've sold the buyer of those options the right to sell me the stock at $30. Okay, so I have to buy 100 shares for each option. I have to buy it at $30, the strike price. Okay, but I sold it for $1.50, so that means the effective price is $28.50. So effectively, if the stock goes below 30, I'm going to be buying the stock for $28.50. Whether it goes down all the way down to 20 or 10, I still have to buy it, and so I would be buying it at 28.50, excuse me. So here's the thing to keep in mind though, if the Square stock goes down that low, that means all the other stocks have likely gone down very low as well. And since I was long a bunch of puts in other stocks, those are going to have made a bunch of money already. Okay, so if I'm assigned these, oh well, if it goes down to 20 and I actually am, buying it at 28.50, so I'm sort of locking in an $8.50 loser at that point. It's kind of like, oh well, at that point, because I made a bunch of money on the other positions. Okay, now what happens if the stock market, what if it goes up right now? Okay, so then this becomes a hedge for my other positions. Okay, so if the stocks go up, I'm going to lose money on those other long puts, but these Square puts are going to lose money, which is good because I sold them, so I want them to go to zero. Okay, so it's effectively a hedge. The other thing is if the market goes down, but maybe it only goes down to $35, it goes down another 10 or 15% or whatever. Great. So I made a bunch of money on my long puts, And in addition, the square puts will go out worthless. So I will have just collected that $1.50 in premium. So it's a way to hedge, and it's a way to kind of position yourself to buy the stocks that you want to buy anyways. But I wouldn't do this if I wasn't already short the market, in other stocks. This is a strategy where I'm selling high volatility. I'm just looking to sell this high volatility that we have right now, and and just hedge my current position and position myself to buy the stock at a very cheap price, or what I perceive to be a cheap price. And that's it. Thanks for watching.